Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to have everyone back on the YouTube series. As I do with all my videos, I want to first start off by saying thank you to all the viewers and all the subscribers showing the channel so much support. Immensely appreciate that. For today's video, I'd like to dive into the portfolio and talk about different types of dividend stocks that I have in the portfolio. Not all dividend stocks are created equal, and not all dividends are equal as well. If you hold a stock for long enough, you can get qualified dividends, but the important part is not all stocks will pay out qualified dividends, even if you hold those longer term. There are return of capital dividend stocks, stocks that pay out Section 199A dividends. There are a variety of different dividends. So in today's video, I'd like to go through some of the stocks that are preferred to hold longer term for good dividend income to get those preferred tax rates at the end of the year, and which stocks typically do not pay out qualified dividends. So let's go ahead and take a look in the portfolio. As you guys know, Ford Motor Company is one of my favorite stocks in the portfolio, and this is a quintessential blue chip dividend stock. Yes, over the past 1 year, it has been performing like a growth stock. You can see here it's up 151%, up to $25.20 currently. But typically, dividend stocks, they preserve their capital. They do not really move a lot in stock price, but longer term, they have solid dividends, and they typically increase their dividends each year. Dividend aristocrats, dividend kings. If we take a look at Ford Motor Company, you can see dividend yield is 0.397%. That is inaccurate. Ford Motor Company recently reinstituted its dividend at 10 cents per share every quarter, so 40 cents per year. And it did lose its dividend because of the pandemic, not because of the underlying business. Ford Motor Company has been very strong for a number of years. This is a type of stock that will pay out a qualified dividend. So if you hold this stock long enough, and again, I've talked about how to qualify your dividends in prior videos, you will get a preferred tax rate, essentially long-term capital gains tax rate, which if you're in the upper brackets, can drop your tax rate from 40% to 20%. So stocks like Ford Motor Company are definitely stocks to take a look at to hold longer term for dividend income. Another stock here I have in the portfolio that I recently talked about as well is AT&T. You can see here AT&T definitely has been trending down for quite some time. Kind of an inflection point here recently. I think moving forward, AT&T can be a compelling dividend stock. If we take a look at its dividend payout ratio, you can see here it's 7.653%. Again, I'm not going to talk necessarily about dividend stocks with regards to dividend payout ratio and if the dividend is too high, but you want to make sure the dividend can be maintained over the longer term. 7.6 is probably too high for a dividend stock. AT&T is going to drop its dividend. That is almost guaranteed with its spin-off of Time Warner. I talked about this in a prior video as well, talking about AT&T. But this is also a very good stock. Telecommunications typically pay out very good dividends for the longer term. AT&T, I believe, is a dividend king. I know it's a dividend aristocrat. Essentially been paying out dividends for a very long time, 25 to 50 years, and each year it's increasing its dividends. So these are the types of stocks that you want to jump into if you are interested in dividend income. There are other different types of stocks as well. Let's take a look at some of the real estate investment trusts. For example, Realty Income. This is a REIT, R-E-I-T, real estate investment trust. Essentially, it will pay out dividends that are quite robust. You can see here, dividend yield 3.979%. Another one, Ryan Office, RET, Stag Industrial as well. This is one of the original stocks in the portfolio. But the thing with these stocks is that they are not always qualified. A proportion of the stock dividend will be qualified, but a proportion will not be. A lot of these stocks will pay out Section 199A dividends, which you can get qualified, but it gets much more complex when it gets to tax time. These are not simply qualified dividends. And the other type of stock I want to talk about is the business development company, Prospect Capital. This is a stock that in the past has historically had a 15, 16, 17% dividend yield. You can see here it's still quite high at 8.219%. But the issue with these types of companies, business development companies, is that the dividends are often not qualified. So when this pays out a stock dividend, let's say it's $1, if you fall into the upper tax bracket, you'll have to pay 40 cents back at the end of the year in the form of tax. You cannot get this qualified down to 20%. Other tax brackets is the same as well. This will always be equivalent to a short-term capital gains. You will always be paying your ordinary income tax rate on this type of dividend. versus Ford or AT&T, where you can get the qualified dividend and pay, again, if you're in the upper tax brackets, half of the tax you pay on the dividend than you would if you would get dividends from Prospect Capital. So Prospect Capital pays higher dividend percentage, but unfortunately, you're going to pay a lot more at the end of the year in tax because you can never get those qualified and you can never pay the lower tax rates. So again, just wanted to quickly go through the different types of stocks. Ford Motor Company, AT&T, these are the types of stocks to get into. Blue chip companies, dividend companies that will maintain their dividends over the longer term. Yes, these companies can lose their dividends from time to time. Yes, they can reduce their dividends. But over the longer term, these are the types of companies that'll be around in 50 years, pay out good quality dividends. Companies like Prospect Capital, for example, do not pay out qualified dividends. You'll pay a much higher tax rate on those dividends. And REITs, real estate investment trusts, also have a very high dividend payout. Their percentage is often very high on those companies. But again, at the end of the year, you'll be paying much more tax because a lot of those will not be qualified. So just wanted to quickly go through that. If there's any questions, please let me know in the comment threads down below. This video was in response to a few viewers on the channel wondering about what kinds of dividend stocks are the types of stocks to get into. What types of stocks do I own in the portfolio? So I own a mix of these types of stocks. But again, the preferred type of stock is a stock like Ford or AT&T, where if you hold the stock long enough, you can get qualified dividends and preferred tax rates. So again, just wanted to quickly go through that. I'll end the video here. If you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until next video, we'll see you then.